All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Okay, guys, so Bitcoin has seen a small bounce over the weekend. We are now coming up to the golden pocket that I laid out in this morning's Telegram group. I talked about this being a possible resistance to reject from. This is also the bearish backtest of our pitchfork, our bearish pitchfork pulled from the all time highs. And if we look at this bearish pitchfork, oh, let me get that back on the screen there. You can see it is the golden pocket from our last big 4 hour drop up here at about 88K down to our 81K lows or 80.5K lows. We are coming up to that golden pocket now. And in this trend recently, Bitcoin's been rejecting from lower high golden pockets. So there is a potential we could reject from this lower high golden pocket and continue the impulse to the downside. As far as our bigger impulse to the downside goes, I do not think we are done yet. So just wanted to highlight real quick, first thing right off the bat, because we are coming into this resistance right now, and this is a possible rejection area. We did try to wick up past the golden pocket, but now we're starting to close. And I did say in the Telegram group, if we do start to lose the golden pocket after trying to push up against it, I will look for a short position and put my stop above the high and a TP1. I will show you guys real quick. So if we do this short here, if we enter upon losing the 618, which I have entered a small short position, stop is going to go above the local high. And my first TP is going to be a local TP because this might be a bigger three-wave corrective move. I'll explain that in a second. But if we turn on some of our new levels that confirmed over the weekend, we have a new daily level coming in around 84.7K. And we also have a new naked daily point of control that confirmed pretty much in that same exact spot there. And so with these two areas, I will be looking for potential TP1 right in this area of about 84.7K. Also, if we pull our golden pocket from the lows to the highs that we made today, we turn on that golden pocket. Golden pocket's a little bit below that, but that, you know, yeah, I guess I would rather look at the daily and the naked daily point of control rather than your golden pocket. But we always do need to be aware of golden pocket support or resistance, golden pocket levels. Okay, so that would be a TP1 for me, but I would hold some of the position open down to that about 78.3K level where we do have our fresh weekly level and a naked daily and a naked weekly point of control between 78.3 and 77.3. I think that's our next big support level for Bitcoin. That is the short that I just entered now. I let you guys know about that in Telegram before I entered. Now, let me go ahead and talk about the bigger impulse to the upside, or to the downside. So I'm going to go ahead and delete this local golden pocket. I'm going to go ahead and delete our pitchfork real quick. And we're going to zoom out to the 6 hour chart here. So from our all-time highs, we can see that we got that big October 10th crash, and we got a pretty clean impulse to the downside. On Coinbase, it came down to about 103K. We had our three-wave corrective move in a rise in a wave two. And then we had another push down and another way. We have to classify this as an internal or secondary wave one and a secondary wave two because we did come up and we had some overlap between the lows of your initial wave one and the highs of your initial wave two. So because of that overlap, we can't look at this as a 1, 2, a 1, 2, 3, 4, 5 wave down, even though it is 5 wave down. First of all, your third wave is usually your largest, most volume filled wave to the downside. And this last push down is our largest and most volume filled wave. But if we look at this as now, we have to classify this as a double 1, 2 impulse, a wave one, a wave two, an internal wave one, internal wave two. This whole push down from 107K has been our wave three, and we are in a wave four retracement now. So our wave four retracement generally takes longer than your wave one retracement, or yeah, your wave two retracement, excuse me. So if we're looking at that was about a 10-day long retracement to the upside, a three-wave corrective move to the upside. And we're looking for this wave four to be similar in time or longer than this wave two was here. And we could be in that fourth wave retracement before seeing one more five, and then we could get even one more 4-5 in here. Because if you have two 1-2s, you're also going to be looking for 2-4-5s. And these are higher time frames where we could still possibly come all the way down to 70K, or we could take out the liquidity below 74K, right below our 74K lows. So overall, my bias is still for more downside on the higher time frames. But on the shorter time frames, on the more intermediate time frames, we might see a bounce for a couple weeks. We might see a bounce for the next, 10 days to 2 weeks or around that time. And in your wave four corrective move, you're going to be looking for the 0.382 to the zero point 0.5 Fibonacci. So if we go ahead and throw on our wave four targets, it's going to be from the start of wave three to the end of wave three. You're looking between the 0.382 and the zero point 0.5 Fibonacci to really end that wave four corrective move. Now, also in a wave four corrective move, you generally want to see that three wave zigzag pattern to come up to that corrective area and then see now a new impulse coming in on the charts, a new impulse volume increasing to the downside after you reject from that resistance. So I do like this resistance around 90.8, that 0.382. And to explain why, I'm going to go on to my Bybit chart here where we do have our bigger pitchfork. Now, before I go into this pitchfork band here, I would like to just zoom out a bit and show you just how well this pitchfork has been respected really for all of 2024 and all of 2025. It's also been respected prior in the past. You can see very high respect on this pitchfork. But we did, last time we came down to the lower band of the pitchfork, we saw a very strong bounce. From our 74K lows, we came all the way up and tested the top of the pitchfork again. After seeing that distribution range at the top of the pitchfork, we have now distributed down, which looks like an impulsive move to the downside, which is, in my opinion, not completed yet. But we have hit our major pitchfork support level again, that band. We hit that pitchfork support band on Friday, and now we are seeing that kind of dead cat bounce or that corrective move to the upside. And if we look at a couple levels here, so let me now zoom back in onto the 2-hour chart. And by the way, in the live streams and in the videos all last week, and actually throughout my entire channel, I often say on these higher time frame pitchforks, we oftentimes will form ranges within these pitchforks. We'll form ranges before either more continuation to the downside in this case, or ranges before a bigger push to the upside. And maybe we're going to say, hey, now we have to look at, is that impulse to the downside completed? But within this range, I would like to talk about, first of all, if we pull our 786 Fibonacci from the highs on Wednesday to our lows that we made on Friday, and we look at that 786 Fibonacci, you can see that 786 Fibonacci is very close to the top of our pitchfork band. We did bounce from the bottom of the pitchfork band here on Friday, and the top of our pitchfork band here could be an area where we do see a small rejection. And if we go ahead and throw on our wave four targets from the rejection of 107K down to our lows that we made on Friday, we turn on those wave four targets between the 382 and the 0.5 Fibonacci. You can also see that 0.382 is coming in just above your pitchfork band, which you will see wicks past the band just a little bit, just like the low that we made on Friday. You see we wicked past the band just a little bit, but we did not close a candle body below that band. So we might see something here like a three-wave corrective move to come up over the next 10 days or so to that 382 area, reject from about 90.5, 90.8, and then see that impulse continue down to 78K and possibly even lower. So this is what I'm going to kind of be watching. Now, within that wave four corrective move on higher time frames, on the daily time frame, we're looking for 10 days or longer of a corrective move. And we've already been 3.5, 4 days into this corrective move. But generally, you want to see a three-wave zigzag correction to the downside. Now, we could come all the way up to the 0.5 Fibonacci, which is about 94K. You can see we have a key anchored VWAP that is going to be close to there. That is your anchored VWAP from the 49K lows that we lost last week. And that is also going to be a very key level. But in that three-wave corrective move, we generally want to see if it's going to be an ABC three-wave move to the upside. Within your A wave, you're looking for a 5-wave impulse. So if we zoom in onto the 1-hour chart, now this is not the nicest impulse. If we're looking at this move up from Friday's lows as an impulse, it's not the nicest move up because generally your third wave is longer than your first wave, and your third wave cannot be the shortest wave. That's a hard invalidation. But if we're looking here at the structure of this move up, we do see a clear 1, 2, 3, 4, and then with the move up today, a 5 right into your golden pocket. So if we have our 5-wave move up to the golden pocket, now we should be looking for a 3-wave corrective move to make a higher low. We could be looking at that daily and that golden naked daily point of control around 84.7. And then we look for now another impulse in the C wave to come up to your 382. And that's why this could take some time to play out on the charts. It could take a week or so, but right now we are rejecting from our golden pocket. And I talked about this area earlier today in the Telegram because this was our golden pocket in confluence with that pitchfork that we lost. And when you lose a bearish pitchfork, you can see we wicked up past the golden pocket, but we are rejecting at the golden pocket now. Now we might see that move. Let me go ahead and turn on our dailies and our naked dailies, and we'll just mark out a little box here for our support level being that 84.7 to about 84.5. This general area of support, we could see that 3-wave corrective move come in now to where we're going to come down in another creating your overall higher time frame wave 4 corrective move before seeing your wave 5 down. And so this is what I'm looking at as the highest probability right now. Now, it's not guaranteed that we reject from the 0.382. It's just there's other confluence there at the 382 to suggest that we could reject. Also, in a strong trend, the 382 will often act as support or resistance. Well, I would say this is a pretty strong trend on the charts, guys. Our drop from the all-time high is a very strong downtrend, making lower lows and lower highs. So rejecting from the 382 also makes sense because it is a strong trend. Now, could we, in this move right now to the upside, push all the way up to the 382, reject, come down to your golden pocket, and then come up to your 0.5? Yes, absolutely. That's a possibility. And if we do that, I'll still be looking for a potential short at that 382, but I'll be looking at it as a scalp short to make a higher low before making a higher high. And if we just take a theoretical Fibonacci from the lows of Friday up to that 382, you can see that our golden pocket now would be aligning because right now it's below our support level of the daily and the naked daily point of control. But if we did come up to 90.8 first, rejected, and then saw a move down, you could see our golden pocket is in perfect confluence with that daily level and that naked daily point of control. New naked daily point of control right at the golden pocket, new daily level right at the golden pocket. Now, this is a theoretical fib for now. We have not come up to the 382. So right now, that is not in alignment. If we reject right now from our local golden pocket, then I still will be looking at this area as a micro support level, but not this in the same way that I would be looking at it with more confluence if we came up to the 382 first. Now, if we came up to the 382 first, I would be looking for a bounce from that 84.7 level. And then I would be looking for a move up to the 0.5 to end your 3-wave corrective move. And then you get your nice 1, 2, 3, 4, 5-wave impulse down, 78, 77K. And then that would only be, guys, our first 4, 5. And we would need 2, 4, 5s because we have 2, 1, 2s in here. We would need 2, 4, 5. So you're 4, 5. And then we would look for another retracement and another 4. And then another impulse down into 5. So you have your 2, 1, 2s, you have your big third wave, and then you'd have your 2, 4, 5s here. Possibly ending and finding the end of this macro impulse at 70K, which is macro support here. 70 to be a very crucial support level. That's really the big level that Bitcoin really does need to hold. First of all, we would, if we're looking at our higher time frame, let's just zoom out to the 2-day chart. If we're looking at our higher time frame bullish structure that we've been talking about for months on this channel, after our 5-wave impulse on the weekly time frame ended, we saw a wave 1, a wave 2, wave 3, a wave 4, and a wave 5 that ended in February. Now, after that 5-wave impulse ended, if you guys go watch my live streams on Friday, I covered this in depth as well. And on Thursday, there's a possible flat correction in here where you do come up You reject from the 1.382 Fibonacci, and then you come down to take out the lows of your initial push down, which is 74K lows. So seeing that push down into our golden pocket and seeing that flat correction, we would want Bitcoin to really, that would be the end of our multi-month correction after a 2.5 year impulse to the upside. And then maybe we could start a whole nother impulsive cycle to the upside that could last another year, could last another 2.5 years. We don't know. The 4 year cycle might be ending now. But this is one of the speculations on the high time frame, a bullish speculation. Now, of course, the bearish speculation is that we are going into a bear market. We do have some confirmations for the bear market, guys. Unfortunately, we do have some confirmations on that bear market with the monthly bearish divs that we're seeing on the chart. You can see monthly bear divs, higher highs in the price action, lower highs in the momentum waves. And really, this is from but even from last cycle, you can see lower highs from last 2021's all-time high, 2022's all-time high, 2021, excuse me. And then even in this cycle, you can see the triple drive of bearish divergences from our 2024 all-time high up to our new all-time highs. We have the bear divs, and now our monthly money flow is finally starting to really curve down here. Also, you can see the triple drive of bear div that NAMI has confirmed, and we have also confirmed bear divs on the money flow on NAMI. So this is confirmation that we could be going into a bear market, or at least an extended bear cycle like we saw in mid 2021, the summer of 2021. Okay, but let's get back to the lower time frames on Bitcoin. Also, guys, we do have weekly bear divs. We also have, we had some daily bear divs at the top, and these are all signs that a bear market could be starting. Last week, I know I came out pretty bearish and pretty aggressive when I said that we lost our, I'm sorry, I'm going to zoom back out real quick one more time. When we lost our Fibonacci channel, and if I turn on that macro fib channel, that is going to be our trend for the entire bull market. And you can see this fib channel was pulled from the very first break in structure on the bull market, of the weekly break in structure in a higher low. We're losing and closing our weekly candle. This is our first close. Actually, it's our second weekly candle close. No, first weekly candle close. Sorry, let me get out onto the weekly. First weekly candle close below our fib channel. And this to me is a sign that we could be in a bear market. We're finally breaking our bull market structure of making higher highs and higher lows within this Fibonacci channel. Now we're finally breaking the support of that Fibonacci channel to the downside, confirming that, yes, the bear market might be here. What we could see, though, is a fake out of the channel, and we would want to get back inside of it relatively quickly. So if we do come down to 78K or 70K or 74K, and we bounce from one of those levels and really start to impulse up and get back inside of that Fibonacci channel, then maybe we're going to say that's our first major fake out of the channel, because we have had no fake outs of this channel. We really haven't even had a test of the channel, of the bottom of the channel. Now, the midline has been highly tested and highly respected. But the fact that we're losing and closing a weekly candle below this Fibonacci channel is a bearish sign to me, and it could mean continued downside. Now, I want to go into, while this Fibonacci channel's on the chart, we can look at the bearish backtest, because many of you guys know that follow me on my channel regularly. I talk about bearish backtests a lot. I talk about bearish backtests with volume profiles. I talk about bearish backtests with pitchforks, and I talk about bearish backtests with channels. And anytime you're in a channel, all a channel is you're following the trend, right? The trend is your friend until the end. So for this entire bull market, our trend has been higher highs and higher lows overall on macro timeframes, and really highly respecting the major levels of the channel, the major Fibonacci levels of the channel. And so now that we're losing the channel and closing a weekly candle, we could bounce up to backtest that channel bearishly. And if you reject, you expect new lows to come in below last Friday's lows. And so if we look at, let me go ahead and zoom in on the 4-hour time frame, and we look at where is that channel bearish backtest coming in at. It's coming in around 92.5K. Well, let's go ahead and zoom out onto the daily time frame, and let's look at our range, our macro range volume profile of the entire year of 2025. This range right in here that we've been trading in for most of 2025. And if I turn on that macro fixed range volume profile, you can see that the bearish backtest of the value area low of that range is going to be right in confluence with that channel. And so here's the thing, guys. We've also lost the value area low of our macro volume profile, meaning that this, what used to be considered undervalued for Bitcoin, the value area low is considered undervalued for the market. Now the market is no longer accepting Bitcoin at that price being undervalued. They're saying, hey, maybe we need to break down and form a new, go find fair value at a lower price for Bitcoin. So here's the confirmation here. We've lost it and we've closed a weekly candle below that. But we did bounce from a monthly level that was down there, wicked past it a little bit in some liquidations, but we bounced from a monthly. And now if we come back up here and back test that value area low and that channel, that Fibonacci channel, and we do reject, we expect new lows to come in on the chart. We expect the overall downtrend to continue here. And so this is something that I am watching now on the charts for that 92. It's about 92.3. Let's say 92.3. That's the bearish backtest of the value area low. And that is an area where we could see a macro rejection to create new lows on the charts. So just be aware of that. If you guys want to put that on your chart, that level on your chart, it's right around 92.3. On Coinbase, that value area low is coming in around, let's zoom in on this so we can get a better look. We'll go on to the 3-hour time frame. It is coming in, yeah, 92.5, 92.6. Let's just say between 92.5 and 92.6. And that could be the end of our wave 4 correction as well. Now, I talked about with your wave 4 corrective move that we might see over the next week or 2 weeks. We look between the 0.5 Fibonacci and the 0.382, but it doesn't have to end exactly on one of those fibs. As long as it makes it up to the 382, that's generally your minimum target for a wave 4 retracement. Your most common minimum target. We could reject from the 236 as well. But you can do something like this where you reject from the 382, bounce from your higher, make it quite up to the 0. And so that is another scenario we'll be watching. But it is bearish to me that Bitcoin is closing a weekly candle below our Fibonacci channel. Also, if I just go ahead and let me turn off our Fibonacci channel and we go to our pitchforks and we look at our wave 3 pitchfork, guys, it's the same story. Let me zoom out to the daily time frame. For most of 2025 and for the last quarter of 2024, we developed this pitchfork based off of our larger weekly impulse wave 4 corrective lows that was our range for 8 months of 2024. Now, from those corrective lows, let me hide this range. You can see that this pitchfork has been respected for over a year. Highly, highly respected for over a year. Well, this is the first time where we've lost the pitchfork and we're closing a weekly candle below our pitchfork trend, showing that this bullish trend for all of 2025 could be about to reverse into a macro bear trend. But anytime you lose a pitchfork like this, you're watching for a bounce from support and then a local bearish backtest of that pitchfork on a dead cat bounce or a corrective move before confirming new lower targets here. So once again, the bearish backtest of our pitchfork is going to be right around the same exact area. If we turn on that value area low macro range, you can see it's pretty much in the same exact area as your channel, your Fibonacci channel. So high time frame levels 92.5. It's going to be a very key area where we could reject to come down to 78K, 77K, and then even possibly lower in the impulse. Other than that, guys, there's not too much else to talk about. Bitcoin is seeing a small relief rally. Let's zoom in onto the 4-hour chart, and if we look at this rally that we've been seeing, and we look at the volume on this rally, now you can see that yes, volume locally is coming to the upside, and one spike in volume, our highest spike in volume, is towards the top of this impulse. Now, generally, you want to see if we're looking at a lower time frame impulse, like on the 1-hourly chart. We're looking for a lower time frame impulse, a wave 1, wave 2, 3, 4, 5 here. Generally, you want to see your highest spike in volume in your wave 3, and we do not see that. We see the spike towards the end of the move today, right up into our golden pocket was the highest amount of volume. Now, that could be because if let's zoom in here on the 15-minute chart. Yeah, actually, it was at the highs up, even at the highs of the move, the green candle. So that is generally sometimes we see that spike in volume right at the end of a dead cat corrective move as well. If you guys know anything about corrections or ABC corrections, oftentimes your C wave or just the end of a corrective move has the highest amount of volume. And we are seeing that high amount of volume come in at the end of the move. Okay, zooming back out, let's go to the 2 hour chart. If we look at this corrective structure that we're seeing here, we can go ahead and throw a channel on, and we're just going to pull it a channel like this. And you can see for the most part that channel is being respected, midline being respected in here. And we're rejecting from the top of the channel right now as well. That was our golden pocket. That was also the bearish backtest of our pitchfork that I showed you guys earlier today in the video. And you can see that our actual support level, our local support level, if we're going to make a higher low, is coming in at the bottom of the channel. So if we are done with this move, we're going to come down, bounce from the bottom of the channel, then we could see that move up to 90.8, which would once again be the top of the channel. If we throw on that 382 again, let's just throw on those wave 4 targets, you can see that that 382 would be coming in right at the top of the channel. And so we got, guys, we have confluence for what Bitcoin's could possibly do here. And in that 3 wave corrective move, of course, it would take a little bit longer than this, but we could just be trading in a channel. And once again, this is a trend, a corrective trend before finally rejecting and coming down. So just be aware of that, guys. That's what I'm looking at for Bitcoin here. Still overall, my higher time frame bias is for new lows to come in on the charts, for the impulse to not be done yet. But for the next short to medium time frame, week to 2 weeks, we could be in a small uptrend or sideways range type of thing. Okay, moving on to our our order flow here. Let's zoom out to the 15-minute chart again. And guys, our order flow, our open interest is still just tanking here. And you can see really ever since our 107K highs, our order flow, our open interest, which is the amount of new positions opening or closing on the charts, is just tanking. And it just looks like we are seeing positions close out, especially today. Look at towards the top of our move. And now that we are dropping, we saw a lot of late longers stepping in today in particular. We saw some longers stepping in. It wasn't a lot of longers. If we look on our aggregated chart here, you can see it's a mixture of long and shorts, but overall, open interest is dropping, meaning positions are closing out here. But if we look at the move up primarily of today, this kind of slice of price action right here, you can see that a lot of if we look at our CVD, which is our market shorters or market longers, you can see that the CVD is rising here. So a lot of long positions are stepping in. Now, some of those long positions are shorts that are being forced to close out, late shorters that are being forced to close out. And how do we know they're late shorters being forced to close out rather than new long positions? It's primarily because your open interest is decreasing here. If your open interest is decreasing, that means they're late shorters getting stopped out, and a stop or a liquidation on a short is a forced buy. That's why your CVD is rising here. But we did see some spikes in green, some little pushes to the upside here in your open interest. So we also saw some people stepping in and longing the market. I would say a majority of it is shorts getting stopped out or liquidated. But that's about it for Bitcoin, guys. Other than that, there's not too much to look at. If we do look at our heat maps here, let's zoom out to the last week of price action. And in the last week of price action, you can see we did have some liquidity that was resting above us. We actually came into, it was right at our golden pocket pretty much. Our golden pocket that we're rejecting from right now. So if we pull that golden pocket around 88.3, and you can see that's kind of where we rejected. If I go on to the 4-hour chart, you can see it was a better rejection, just a wick past the golden pocket, but we are rejecting from this golden pocket. And right at 88.3, you could see that we did have that liquidity resting up into that area. So took the liquidity. Now are we about to see the downtrend continue? If we go to our Model 3 heat map here, looking at our Model 3 heat map, yeah, we do have some liquidity still above us. And once again, that's coming up into that 382 Fibonacci, the wave 4. Let's zoom out to the weekly chart. Let's throw that weekly chart on. Yeah, but we did take most of the liquidity that built over the weekend, or that built from yesterday's high. You can see we dropped a little bit overnight, and then we took out that liquidity. But for me, guys, everything does look corrective. Everything looks a little bit corrective here, a little bit bearish. We are creating some local bear divs as well. Zooming into the 2-hour chart, you can see within this channel, we have higher highs on the price action, lower highs on the momentum waves. Also on NAMI, we have bearish divergences, and we have bearish divergences on money flow. As we are rising within this channel, money flow is getting lower and lower and lower with every hump, showing those bear divs on the 2-hour chart. On the 1-hour chart, very similar story. Bear divs, and money flow on NAMI, which is quicker, as potentially confirming some bear divs right now. So that is what we're looking at for Bitcoin. Now, before I move on, I want to cover the total market cap. I want to cover some of the altcoins in today's video. But before I do, I want to talk about the partners of the channel. The main partner of the channel is going to be BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up with BYDFI. If you do sign up using my affiliate link, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some larger amounts into the exchange. They are offering up to $8,100 in futures trading bonuses, depending on how much you trade in those futures markets, how much volume you move. And they're offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100, you'll get a 50% deposit bonus, which is the highest I've seen out of any exchange out there. And they're offering various 20 and 10% deposit bonuses, depending on how much you deposit. Also, I have partnered with BYDFI to create a Telegram community. And in this Telegram community, I post my analysis on the market, my thoughts on the market. I do post some trade setups in there. Pretty much I go with the safer trade setups, and that's why sometimes there's not a lot of trade setups recently here. But if you're interested in joining that Telegram community, it is free to join. All you need to do is sign up with BYDFI using my affiliate link in the description, and then deposit $100 into the exchange. That $100 is your money to trade with. You will get the discounts on the trading fees, and you will get the bonus as well. So I think it's a win-win for everyone. Now, once you've done that, you can click the Telegram link in the description of this video. And once you're in that Telegram channel, type in /verify in your user ID, which will be right up here. And it's probably going to be a string of letters and numbers up there. But that'll get you access to the Telegram. Once you type in /verify in your user ID, you'll automatically be put into that Telegram community. And once you're in, you're in. Okay, next partner of the channel is NAMI Trading. And NAMI is a great momentum and money flow indicator. And I use this for entry and exit confirmations on my trades. So, for instance, right now, as we're coming up into this golden pocket, we're seeing some bear divs on the chart. Bear divs on the chart, bear divs on money flow. And that could be a confirmation that, hey, okay, we wick past the golden pocket. If we start to lose it, I can short this because we do have confirmation of bear divs and look for a scalp trade to the downside here. And so NAMI is a great tool for me. It's based off momentum and money flow. It's a really, really professional, great tool. They've also got, this is just part of NAMI. They've also got other, I guess indicators that are in it. You can see order blocks. You can see fair value gaps. You can see really where the money's at here. You can see we have a breaker block in here. But NAMI is a great tool, and NAMI has partnered with the Divine Hood channel to give you guys 50% off on NAMI. Now, for Black Friday only, they are doing, until Black Friday's done, actually through Cyber Monday, they are doing a special deal for our community. If you do sign up, the first 3 buyers that sign up using this discount code Divine65 can get 65% off NAMI. Now, this is the highest discount code I've ever seen him give here. So first 3 buyers get 65% off. The next 5 can get 60% off. And then for unlimited amount until Cyber Monday is done with, you can get 55% off. So it's their Black Friday sale, the best sale of the year they do. If you're interested in purchasing NAMI, guys, I really highly suggest you get it now because it won't be cheaper than this time now, especially if you're one of the first 3 buyers there. Um, that is the second partner of the channel, and NAMI is a great tool that I love to have. So really couldn't trade as well as I do without it. All right, the next 2 partners of the channel are just Bybit and MEXC, both great exchanges, both offering discounts on trading fees, some 10% deposit bonuses for MEXC, and Bybit is offering up to $30,000 in futures trading bonuses, depending on how much volume you move in those futures markets. Okay, back to the TA, guys. Back to the TA. Let's go ahead and go to the total market cap. And I'm going to zoom out onto the daily time frame. Now, guys, we finally came down to the bottom of our pitchfork. For the entire year of 2025, let me just show you this real quick. And I showed this a bit on Friday's stream. But when we came up to the top of the pitchfork here in December, January of 2025, we did, I got a lot of flack for saying, guys, I think we're going to see a big retracement on the crypto market, and I'm taking some profits on some of the altcoins. I am also going to look at potentially flipping short on Bitcoin, and total 3 market cap was also showing that. We were right up towards the top of the channel, top of the pitchfork here, and you can see back to the total market cap now. We did reject, and we came all the way down to our lower band. Now, this golden pocket's a new golden pocket. We're not bouncing from this golden pocket there, but we did come down to the lower band. And after bouncing from the lower band, we worked our way up to the upper band. We rejected from the upper band, and we kind of bottom of the pitchfork. Now, the tops and bottoms of pitchforks are very, very strong levels of support because it's your trend. You're going to reject from kind of your upper limit of the trend, and you're usually going to bounce from the support level, the lower support level of the trend. And so we are bouncing from the bottom of our pitchfork. And yes, we could see a nice big bounce from the bottom of this pitchfork, and we could come all the way up to backtest our pitchfork band before losing it, or the top of our pitchfork band before losing it and coming down to our macro golden pocket. But we are seeing an expected bounce at support like we would expect to see. So for me, it does look like, we do have that similar double 1-2 impulse, a wave 1, wave 2, internal wave 1, internal wave 2. And we have to say that because there's overlap between your first initial wave 1s and your highs of your secondary wave 2 there. This would all be considered a third wave. So we could be in a 4th wave corrective move before seeing some 4 or 5s come in here and dropping all the way to our golden pocket at about 2.4 trillion. But we are seeing a bounce from our pitchfork support level. And this bounce could bring us up a little bit higher here. If we pull our Fibonacci from the highs of wave 3 to the lows of wave 3, we turn on those wave 4 targets. You can see that 0.5 Fibonacci at 3.16 trillion could be where we do reject for a lower high before kind of breaking. That bearish backtest of the pitchfork band around that 0.5 Fibonacci is going to be a key area where if Bitcoin is coming into resistance at the same time total market cap is, or some of the altcoins are coming into their resistances as total market cap's coming into here, it might be some added confirmation to flip short. All right, moving on to Ethereum, guys. Now, Ethereum did bounce from our support level. I laid this out earlier in the week for you guys. I let you guys know about this support level very, very clearly. A week before we came down and hit it. I let you guys know that the 786 Fibonacci in confluence with our pitchfork midline was going to be a level where we would expect to see some sort of bounce. It was also the value area high of our previous range. You can see this previous range right in here. That is our value area high of our previous range. And we came down, let me fix that. We came down to our support level. We did wick a little bit past it, but overall held the daily candle there. We bounced from our support level, and we are getting that nice little kind of dead cat bounce in here. Now, Ethereum is looking like a stronger bounce than Bitcoin, and with the way Bitcoin dominance looks, which I'll go into in just a second, we could see the altcoins recover a little bit more than Bitcoin. They also dropped quite a bit harder than Bitcoin as well. But we are looking like we might continue in the overall bearish momentum to the downside, making lower lows and lower highs before coming lower here. So just be aware as far as our pitchfork trading goes and our volume profile trading goes. I talked about this in depth on Friday's live stream, so you can go watch that if you want to, but I'll explain it quickly here on this video today. But we pretty much rejected from the top of our channel. Very important. After rejecting from the top of the channel, seeing this distribution range, this was a distribution range at the top of our pitchfork, excuse me, not our channel. Distribution range at the top of the pitchfork, you started distributing down here. But we did bounce from the initial back test of our 4-year long range value area high. That's this range right in here. You can see it goes all the way back to May of 2021. So 4 years long, about 4 years long. Now on Coinbase, that value area high is about $3,600. You can see we bounced in the initial October 10th crash, not only from the bottom of your pitchfork band, but also from the bullish backtest of your value area high. We then kind of chopped around, formed a range in here. You can see the upper part of the band held for multiple support levels, but then we lost it, and we lost the entire band and the value area high. And on a dead cat bounce last week, or over a little bit over a week ago now, 2 weeks ago, we bearishly backtested. So anytime you lose a band, just like I just talked about with the Fibonacci channel on Bitcoin and the pitchfork on Bitcoin, anytime you lose a major level like that, you'll usually bounce from a local support. You'll bearishly backtest it. And if you reject here, you expect new lows to come in. And that's exactly what we saw. We rejected here on the bearish backtest of the value area high and of our pitchfork band, and we dropped to our next major pitchfork level. As far as pitchfork trading goes, it makes sense. Rejected the top of the pitchfork, held support at the top of the pitchfork band. Once we lost the pitchfork band, support, which was the midline. Now we are seeing a bounce from the midline, but I would say this, the bounce from the midline does look like it could be just a dead cat bounce before seeing another low come in on the charts. And if we take our golden pocket from the last lows at around June of 2025 to our highs that we had, our all-time high in this case, and we turn on our golden pocket, you can see, actually not that golden pocket, the golden pocket from the lows of the impulse, from our $1,400 lows, all the way up to our all-time high. This is also our non-log golden pocket. Now, I do have to caution you guys, this is the improper golden pocket to use because we're on log scale here. And I showed this in Friday's live stream. But if you guys just look, it's not a proper 61.8% retracement. And the 618 is supposed to be a 61.8% retracement. But an example of why that's wrong, let's just take some trend lines. We'll go from the all-time high down to that 618, and we'll go from the $1,400 lows up to that 618. You can see I'm just going to throw it right where that 618 is. And if we look at these retracements, the bottom level is lower. This should be, to get a proper 61% retracement, you would want this to be longer than this here. I hope this is making sense. I'm not explaining it well. But anyways, to get the proper 61% retracement, you need to take that golden pocket, come into your settings on your Fibonacci, and turn it based off log scale. And that's going to give you your proper 61.8% retracement. And you can see that proper 61.8% retracement is coming in between 2,250 and 2,160, just estimating there. And this is a level where I think we could see a macro bounce for Ethereum. And we might continue to kind of chop around in here for a bit, bounce, maybe see some bearish backtests before we come down to this area, this general area. And by then, you can see we have some key liquidity that is resting below that golden pocket at about $2,100. So maybe we saw some 1-2s coming in here. We had our big third wave down. We could see now some 4-5s that bring us down to about $2,100, where the bottom of your golden pocket is going to be in confluence with a major level of liquidity, and it's going to be your lower pitchfork band. And once again, guys, if we lose, just like Pitchfork Trading 101, if we lose the midline, we can expect a bearish backtest. If we reject on the bearish backtest, we can expect a drop to our next major pitchfork level. So That is what I'm going to be looking at with Ethereum if we do continue to drop down here. Overall, Ethereum's getting a nice bounce right now. Do we have bull dibs on the daily? No, we do not have bull dibs on the daily time frame. Zooming in onto the 2-hour time frame, once again, Ethereum is kind of trading within this ascending channel that Bitcoin is trading as well. So if we pull an ascending channel here, you can see we have a very nice little ascending channel here. And we're kind of just chopping within the ascending channel. But unlike Bitcoin, on the 2-hour chart, we do not see bear divs. Now on NAMI, we do see some bear divs. On NAMI, we see some bear divs here. But on Market Cipher B, we do not see bear divs. So I would say Ethereum is looking at least a little stronger than Bitcoin at the very least. But this is about it for Ethereum. Now, we did confirm some local levels on Ethereum as well. If we go ahead and turn on our daily levels, we do have a daily above us at 31.21, and this is an area where I'll be watching for a potential rejection. If we pull on those wave 4 targets being between the 382 and the 0.5 Fibonacci, you can see our 0.5 is right near that daily level. So this would be an area of resistance that I would be looking at on the charts for a potential rejection between the 0.5 at 31.39 and our daily level. Let's just make that purple. And then if we turn on our naked daily points of controls, you can see we also have a naked daily point of control that's right up in that general area, and even a naked daily point of control right below that area. But really between like 31.20 and 31.40 is where I'd be looking. We do have a naked daily point of control at 30.87 that is right before that. But we might see something like a wick into our resistance with a candle body close of a 4-hour candle at this naked daily point of control. But that is a potential rejection area for Ethereum, 3100, 3120, 3140-ish. And then if we look at our support levels, we do have that naked daily, a new naked daily point of control at about, what is that, 2750, 2746. And we do have, it would take the liquidity of the second pivot of the channel. And if we pull our golden pocket as well, golden pocket's going to be a little bit below that. Let's see. It's actually right on that naked daily point of control. So this would be our local support level. Now, guys, let me be very clear. These are local levels of support and resistance. If the crypto market starts to get highly volatile again, like it was last week, we will flush through these support levels or resistance levels as quick as a hot knife through butter. So just be aware, if we're going to get into some rangy type price action, these are local scalp trade areas where you could look for shorts and look for longs. But if the market is going to maintain its volatility that it had last week, we could bust through these so easy. So I would not be setting limit orders at these levels. I would be setting alerts at these levels where if we come down to this level, your alert goes off. You can look for confirmations to take a long, a scalp long. Not SFP, but yeah, you guys get the idea. You know, we could take a scalp long here if we find that support level with confirmation. But that's the levels for Ethereum. That's kind of what I'm looking at for Ethereum right now. Resistance 3120 to 3140. Support around 2750, where we do have a naked daily point of control in confluence with our golden pocket. And we have the liquidity of the second pivot of the channel. And I talk about this a lot on the channel, but on my YouTube channel. But when you break an ascending channel to the downside, you oftentimes will at least sweep the liquidity of the second pivot, if not the entire liquidity of the channel. So that is it for Ethereum. Moving on to Solana here. On Solana, guys, Solana is bouncing. Let me just zoom out to the daily chart. Solana is bouncing from our macro support level. Value area low of our 2-year long range. Or this is not quite 2 years. It goes back to March of 2024. So about, a year and a half, a little over a year and a half. It's the value area low of our range in confluence with your lower pitchfork band. And we did reject from the top of the pitchfork. We bounced from the upper band, made a lower high, lost the upper band, made a bearish backtest, lost the upper band, bearish backtest of the lower part of the upper band. We lost the midline, bearish backtest, we came down to our lower band. So you can see this pitchfork is being very highly respected. Losing levels, bearishly backtesting. If you reject, you confirm lower. Bearish backtest, reject, confirm lower. Bearish backtest, reject, confirm lower. But we are at our lower band of support now. And in this lower band of support here, let me just delete this little guy. In our lower band of support, it's also the value area low of our macro. At a monthly level down there. We had a monthly level, our value area low, our pitchfork band, and it was a logarithmic golden pocket as well. Actually, I think the log golden pocket was changed. Stream, the log golden pocket was no longer there, but it was a massive support level, and we are bouncing from that support level. But you can see just above us, we do have now our point of control of the range that is about $144. And this now might act as resistance for us to continue pushing down to the bottom of the pitchfork around $109, $110. But we are bouncing from value area low. The first thing we want to see if we want to get really bullish on Solana is a reclaim of the pitchfork, of the POC, and a back test of the POC / pitchfork band and get up. And then we might be able to make a move up to take out our liquidity into our pitchfork midline around $180. You can see that's going to be very, very key resistance though. We have our anchored VWAP from the all-time high and our anchored VWAP from the $96 lows converging in the same exact spot where your pitchfork midline is. So that pitchfork midline is going to be a very key resistance area, right around $180, $175, excuse me. And also, you can see historically that level has acted as support and resistance. You can see we had a green box here. It was a great support level. We got a couple good trades from that support level. Once you lose it, you flip it into resistance, and then you keep going. We did kind of backtest that level already. You can see your prior lows. Let me go ahead and throw the lows on of our crash. We came up to those prior lows. We didn't quite touch them to the dollar, but we did kind of reject from that general area. But because we didn't quite touch those prior lows, we now can say, hey, there's some liquidity resting here into that level of resistance at 172, let's just say $172 up into your pitchfork midline and your key anchored VWAPs. First order of business though, guys, we have to get back above 144 and flip that to support. So now if we zoom in onto the 2-hour time frame, what I'm looking at here is potentially forming a range. And I talk about this a lot on the channel. Oftentimes when you come down to a more macro support level, it's not a V shape. You don't just drop straight into it and then bounce right like that. Oftentimes the market will kind of settle and form a range. And so I could see us with Solana forming a range in between your point of control at 144 and your value area low around 125. And you can already see we already have a nice range developing. Actually, I had that volume profile on my chart earlier. I just deleted it during this video. But we can be looking to trade this range in here. So if we just go ahead and grab that range, all the price action between the point of control and your value area low. First off, we're coming up to our value area high right now. We are breaking above our pitchfork band, which is a good thing. You can see actually throughout the weekend, we broke back into our pitchfork band. We back tested it earlier today, and now we're breaking above the pitchfork band. But we are kind of forming that same channel that we're seeing on Bitcoin, Ethereum, and other coins. I would say that Solana even looks a little bit more bullish, though, because we broke out of that channel. If I go ahead and pull that channel here, you can see actually not quite a breakout. We're at the top of the channel. So we're at the top of the channel. We're at our value area high. And then if we pull our Fibonacci from the range highs to the range lows, let's look at our 786. Yeah, 786 is just above. And did we tap it? Yes, we did. So we are at local resistance right now for Solana. This resistance here, the top of the ascending channel, your 786 and your value area high, we are at resistance right now. We might reject from this area. If we can get above this 786, I do think we're going to come up and take out your range high liquidity, range high double top. We have a double top up here and your point of controls up there. So that would be the next area of resistance for me on the charts, would be kind of this area right here. Let's zoom out onto our daily time frame here. And yeah, no daily levels up there, but let's look and see. Let's go back to the 1 hour chart. Let's turn on our naked daily points of controls. Okay, no naked dailies there, no naked dailies below us. Naked weekly points of controls, we'll look at those as well. And no naked weekly points of controls either. So really, what I'm looking at, we're at local resistance. Below us, I think it's just highly likely that we do form a range in between the value area low and the point of control. Now, trade the range until it breaks, right? So towards the value area high, especially if you have a confluence, you're looking for shorts. Towards the value area low, you're looking for long positions. And we do have a daily level that's going to be coming in right around 127.5. Actually, I think I already have that on the chart. Yes, I did. Okay. We already daily level at 127.5. Let's turn that on. And you can see that daily level, it's kind of close to the bottom of the pitchfork band. I wouldn't say it's perfect confluence. Let's go ahead and throw our golden pocket on the chart. And your golden pocket's going to be pretty close to that daily level. So I would say that's a micro support level. Let me hide the big support box, and then we can get a better look at this. This should not be here. So as far as our local levels of support and resistance for Solana, local resistance we're at right now, value area high 786 and the top of the channel. Now our local support level, if we're going to make a higher low on the charts, would be between 128.5 and 127.5. Let's say that. That is going to be your daily level, your golden pocket, and your pitchfork band, the bottom of your pitchfork band. Also, we have some liquidity from this morning's lows there. You can see this liquidity in there. So that would be a local support level where I'd be interested in taking a scalp long position. Now, let me be clear, a scalp long position. So if we bounce from this level, I will look to take out some profit. If we break above those highs at the 786, I will look to take some profit. I will even look to take some profit potentially at your golden pocket retracement. And what I mean by that is you would pull your golden pocket from the highs we just rejected from. Let's just say we go down to our daily level. You can see that golden pocket would be coming in around the channel midline and the upper pitchfork part of the pitchfork band. That's completely theoretical right now. We have not come down yet. But that's it for Solana. Now, moving on to SUI. Guys, SUI, let's zoom out here onto the daily time frame. SUI is also bouncing from the bottom of our pitchfork, and it's our 1-to-1 trend-based Fibonacci extinction. This is a pretty key level, but I did talk about on Friday's live stream. So I talked about this on Friday's live stream. First off, on the higher time frames, we have very clear impulsive price action from about 46 cents all the way up to about $5.40. A huge impulse to the upside. Now, after that impulse ends, we could be looking for a larger corrective move. And if this whole range that we've been seeing for the last year has been a corrective move, then the 1-to-1 to the 1.236 Fibonacci is your target for that corrective move. Also, your golden pocket pulled from the lows of the impulse to the highs of the impulse is going to be a major support level to look for that. But more importantly, and more of a big support level for me for SUI is going to be our 1.236 Fibonacci extinction pulled from the highs to the lows to the lower highs here. That's your trend-based Fibonacci extinction, your 1.236 in confluence with your macro logarithmic golden pocket pulled from the lows of the impulse to the highs of the impulse. So this level here really between 117 and $108, $1.17 and $1.08, or really even $1.04, is the macro support level that we could expect a swing long opportunity from. Impulse, correction, impulse. We might see something like that. So this area here for me, I'm really going to be looking for some nice like daily bull dibs if we come down into that area for a potential swing long opportunity. You can also see we have a very nice order block in there. That daily order block is also right into that golden pocket and right into that 1.236 Fibonacci extinction. But right now we are bouncing from the bottom of the pitchfork. Very much like a lot of these coins here, we are in impulses to the downside. This can be considered a local impulse to the downside. And one of the things that we're seeing here is you see all these, this kind of channel in here, all these 1-2s, and now we need some 4-5s to come in. So we could be in some dead cat bounces to get some 4-5s until we come down to that golden pocket. So just be aware, I don't think the impulse to the downside on the higher time frames is done with yet. But I am looking for some dead cat corrective bounces to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows over the next, let's see, maybe month or so. So if we're looking at our potential areas of resistance, we could be looking at the bottom of the pitchfork band coming in around 168. That is a level where we might see a potential rejection. Around 168 is your pitchfork band. And we also do have a daily level that's right up there. And let me see if I have that on the charts. Daily level. I have not marked that one out yet. So we do have that fresh daily level. You can see that was front run. Let's just do that and we'll turn those off. So at 166.7, so between 166.7 and 168, we do have some small resistance up there. Let's check our naked weekly point of controls. Okay, we do have a fresh naked weekly point of control. That is going to be at 178, which is the top of the pitchfork band. So that's more confluence for potential short opportunity up there. And then we'll look at naked dailies. And I will mark out our naked daily below us. Okay, now we can zoom in on the chart. Let's go to the hourly chart here. Yeah, so what I'm going to be looking at, let me just hide this one-to-one real quick. What we are looking at is we did form a nice little bottoming range in here, and we're starting to impulse up out of that range, a potential impulse 1, 2, 3. We could be in a 3-wave corrective move and drop from where we're at right now, but SUI does look a little bit strong here, and so I'm looking at least coming up. Our two major resistance areas above us are going to be this box here between 178 and 180. That is going to be your naked weekly point of control in confluence with the top of the pitchfork band. And then at the bottom of the pitchfork band, these are bearish backtests of the band. At the bearish backtest of the band, we have a daily level in confluence with the bottom of the pitchfork band. And we are bouncing from the bottom of the pitchfork overall. So these are the two local resistance levels above us. And then our local support level below us, I would say, let's pull our golden pocket from the lows. Let's go to our lows here to our highs that we made today. And you can see that golden pocket. Let me make sure. Yeah, golden pocket is going to be coming in around your naked daily point of control and the bottom of the pitchfork. So I would say your local support level is going to be between 140 and 138. Now, once again, guys, these are local levels that if we start to get volatile again, they can be smashed through super quickly. So do not set limit orders here. Wait for confirmation. Set alerts at these levels and wait for your confirmations. If you're seeing confirmations for scalp positions, then you could play those. But that's about it for SUI. Let's move on to SAY. Guys, SAY is still just trending. Let me zoom out to the 4-hour time frame. SUI is still just trending within our descending channel. Now, ever since the crash on October 10th happened, you can see the big crash on October 10th. After that crash ended, we've kind of been just chopping down and sideways in this descending channel. Now, we finally came to the bottom to grab our liquidity, and this was very key liquidity at 13 cents. And it was also your pitchfork band of support. We rejected the midline of the pitchfork, and it was also the bottom of your descending channel. So we have now bounced from the support level we suspected we could see a bounce from, the bottom of the channel, pitchfork band, and the liquidity grab. But if we look at, let's go ahead and zoom out onto the daily time frame here. If we look at our larger range here, we can look at, yeah, the range from this push to the upside and the subsequent drop afterwards. If we pull this range sideways, this kind of sideways range that we've been seeing, our value area low of the range, we've lost our value area low. And now we might be coming up just to bearishly backtest that value area low before continuing to drop down. Guys, give me just a second here. My mouse just died. Let me plug this in. Okay, there we go. All right, so yeah, and once again, guys, on these higher time frame pitchforks, you oftentimes will form ranges in the pitchfork bands. Now, I know that doesn't look like much of a range here on the daily time frame, but if you zoom in here, you will see that those ranges are, a week to 2 week long ranges. And so we could be starting to form a range inside of this pitchfork band before losing it to the downside, or before seeing the pitchfork band of support hold, breaking back inside the volume profile and coming back up, to test your pitchfork midline or even the point of control of your range. So overall, we are below the value area low of the range. That is bearish for me. And we can even extend this range and pull it more sideways here, looking at more of the sideways price action. That does change your value area low just a bit. Let's go to the 4-hour chart here. Yeah, and I do like this range as well, because you can see the range does have some important confluence. First off, let me get rid of this. It is going to be the top of our descending channel. And if we're going to continue to chop within this descending channel, we bounce from the bottom. We might be able to make our way up to the top of the channel before seeing another rejection and coming down to the bottom of your pitchfork band, which would be in alignment with the bottom of the channel again. So that area, and we also have some key liquidity resting above that area there. Let's go ahead and throw that on the chart locally. That is going to be at about 15.6 cents, 15.592. And that's going to be the bearish backtest of your value area low in confluence with the top of the channel and in some liquidity, a liquidity grab. I want to zoom out onto our weekly time frame real quick. Let me just check. Okay, no weekly levels. Let's check our daily levels. Yeah, and no daily levels up there either. Okay, all right. Let's go back to the 1-hour chart, and we will look at our naked daily points of controls. We do have a naked daily point of control up there, right near the top of that channel and our liquidity grab. And then we also have a naked daily point of control at 14.6 as well. I'm just going to mark these out real quick because it's going to come into play for. Mark these out. Of course, we're not marking out the one for today because it just opened an hour and 12 minutes ago, so it's not confirmed. But if we look at our local resistance levels, naked daily point of control, top of the channel, bearish backtest of the value area low, and your liquidity grab between 15.5 and 15.7, let's say. 15.5 and 15.75. Now, before then, we do have another resistance area. If we pull our golden pocket, pulled from the highs on Thursday to our lows that we made on Friday, actually that was Thursday, yeah, Friday, you can see our local lower high golden pocket is going to be coming in at our naked daily point of control, and we have some internal liquidity that's resting there. So I would say this is another level of resistance. It's a small level of resistance, but it is a level of resistance in that we could keep an eye on, because anytime you have a naked daily point of control inside a golden pocket, you should pay attention to that. It's also around our channel midline, and you will see oftentimes you will wick up past the channel midline, but overall reject at the channel midline. So that is something we could see, kind of some wickage and some little range below it, but overall we rejected from it, got a small dead cat bounce, and then lost it. And then as far as our support levels go, I would just say our support level is going to be that naked daily point of control in confluence with the bottom of your pitchfork band, the top of your pitchfork band, excuse me, at about 13.25. We can also look at our volume profile of this weekend's price action. Your point of control is there as well. And that is going to be your local support level. Let's also pull our golden pocket here. Yeah, and it's going to be around your golden pocket of your move up from Friday's lows to today's highs. So I would say this is our local support level. Between 13.2 and 13.15. 13.26, 13.15. Let's just say. Okay, that is about it for Sui. Other than that, I'm not interested in anything else. And be aware, once again, guys, I'm just going to keep repeating this because these are scalp areas of resistance and support. If we do start to get volatile, we will squeeze through these so quickly, it will be like they're not even there. So I don't want you guys to set limit orders hoping that it's going to react at these levels. Set alerts. Moving on to XRP. Okay, XRP here. Let's see. Let me go ahead and zoom out onto the daily time frame. I'm just going to get rid of some of this old TA from Friday. Yeah, unfortunately, we did not bounce from the value area low of our macro range in confluence. And I believe these naked dailies are no longer valid. Yeah, so we'll move this guy right up there. Okay, and let's check the naked weeklies really quickly here. I want to get rid of that one as well. And we will mark out that naked weekly point of control below us. And we will also mark out our daily level below us, which actually looks like it's been tapped. But yeah, you have a daily level there. Let's look at the weekly. Okay. We have a weekly open near our value area low, but that is not the same, not confirmed yet. Okay, zooming into the 2-hour chart. Now, we are getting a pretty nice impulse to the upside here on XRP. It does look like we could be in a 5-wave impulse. A wave 1, wave 2, this could all be part of your wave 3 before seeing a 4 and then a 5 here on XRP. It looks actually like it's bouncing pretty strong compared to some of the other coins here. We have two ranges that we're watching. We have our range that is formed since the big October 10th crash ended. So let's go ahead and pull that. And we are back above the value area low of the range. So we're finding reacceptance back within our sideways range since the crash ended. But if we just hide this range real quick and we zoom out and look at our larger range that is for about a year long, you can see it goes back to December of last year, December 3rd, the beginning of December. We are bouncing from the value area low. We did not quite grab the liquidity from the crash on October 10th, and I did want to see us maybe come grab that liquidity. But we're kind of just grinding down, really, from our all-time high. We're grinding sideways and down, and we can actually look at a descending channel in here. Let me turn off some of these levels. Clean this chart up. that off. And these are, let's just hide that. And these are fresh ones here. So we'll look at that. We'll keep that there. And then this is a level of resistance, value area high, golden pocket, pulled from the all-time high to the lows that we just made on the crash. That's going to be a very key resistance. That's more of a swing resistance area. And let me adjust this box. Golden pocket value area high. That is going to be between 277 and 283. That is going to be a macro resistance. But in the meantime, we are trading within this small sideways range in here. And you can see we had deviation of the range, and now we're back inside of it. But overall, we're in a downtrend. And if we look at our downtrend, you can see that we're trading within this nice descending channel. You know, for the most part, we were in the upper part of the channel. Since the crash, we wicked down, but we're still kind of grinding within the upper part of the channel still. So what I would say is the top of that channel is going to be your macro resistance at your golden pocket at your value area high. But because we did deviate the value area low and we're back inside of our volume profile, we have a high likelihood of at least continuing up to test the point of control around 241. So if we pull on, let's zoom into the 2-hour chart now. And if we look at our range in here, so this is our sideways range right in here. So if we pull a Fibonacci from our range highs to our range lows, or our lows that we made on Friday, you can see that golden pocket is going to be coming in right around your point of control. That is going to be a resistance area. Between 236 and 241, let's say. 236 and 240.5 is our resistance area above. With some with a naked daily point of control and some internal liquidity at 230 that we are going to have to pay attention to. That area right there is a potential area where we could reject. And the reason why I'm saying that, because if we look at our rejection high, our lower highs, when we rejected from the value area high of this range, let's pull this range again and we'll pull it here. You can see we kind of rejected from the value area high here. That is still going to be your value area high. So we can pull another golden pocket from that lower high rejection last on November 10th to our lows that we made on November 21st. Our golden pocket from that push down is where we're coming into right now. It's going to be an internal liquidity grab in confluence with a naked daily point of control and a golden pocket. So also an important level. I would say this resistance that we're dropping into right now is not as important as the resistance that we have just above us, but it is a resistance indeed. We are at resistance now on XRP, and we could drop here. So 2 resistance levels right now. Internal liquidity right there from last Monday's highs. Now to the downside, if we pull our Fibonacci from the lows to the high, our current highs, our golden pocket is going to be coming in at the value area low of our macro range. And now that we're back inside our volume profile, if we do reject from a local resistance, we need to look for a bullish backtest of our value area low, which is at your golden pocket. If we do continue up, reject from resistance, we still need to look for a potential drop to backtest our value area low. Now, that would make your golden pocket a little bit higher than it is now, but we would still be looking for a rejection, a bullish backtest of that value area low. And then, of course, your 786 Fibonacci, your current 786 Fibonacci is going to be below that naked weekly point of control. But I'm looking at if we do continue up to our point of control and our golden pocket, then we would be looking at your 786 right next to that naked weekly point of control. That's theoretical right now. That is not an area I'm interested in right now. So the local support to the downside. Remember, local levels, guys, these could get busted through. Do not set limit orders here. Set alerts and wait for confirmation as we're coming down, if we come down to those levels. But that local support level is going to be at like 198 to $2, let's say. And that's it for XRP. Other than that, I'm not interested in trading anything else. I would say this, now that we're back inside the value area low of our local profile since October 10th, so for about a month and a half now, be aware that this bullish backtest of the value area low at 216.5 is a possibility as well. So say we reject here, bounce from the value area low, only to come up to our more big support level. That's something we could see continue to play out here. And that would also make sense if this is going to be a 1, 2, 3, 4, 5, coming up in a 5-wave impulse to about $2.40. So 216.5 might be a super small level of support, a scalp level, like where you could long here. Your stop would go below. I would wait for a little bit of bounce. Your stop would go below wherever that low was, and you would be targeting, the golden pocket to point of control. That's still a really good risk to reward trade there for that trade. And remember, we're looking at risk to reward. Scalp trades can be just as profitable as swing trades if you have proper risk to reward. But that is kind of what I'm looking at for XRP. Now, lastly, let's go into Chainlink here. Chainlink is at our local golden pocket resistance as well. You can see it's our resistance from last Wednesday down to our lows that we made on Friday. It was kind of, so we were grinding here, losing the bottom of the pitchfork. Now, we didn't actually come to backtest that pitchfork before dropping to our major support level. I did lay out this support level to you guys last week. Zooming out to let's zoom out to the daily chart real quick. So we were looking at coming down to this support level being your macro value area low and your macro 786 Fibonacci. And we did come down there. We bounced from that general area. But look at here. We've lost our pitchfork. Our big pitchfork, we've lost it. And so now a couple things we could be looking at is the bearish backtest of that pitchfork, which also happens to be in confluence with the point of control of our 2-year long range. This goes back to November of 2023. So it's over 2 years now, or about 2 years now. So what we could be looking at is that 14.3 level being a very big level, possible rejection. And I would say one thing here. We did not actually hit the value area low of our range. We front ran it just a bit. You can see the value area low was at the bottom of the box, and we did not hit the bottom of the box. So just be aware. Actually, I think there was a daily level there as well. Yeah, it was a daily level that we hit. A daily level. Let's get rid of this one. This is busted through. But now we do have that point of control in confluence with the bearish backtest of the pitchfork at 14.3. Now, this could be a big rejection area if we're going to continue to reject and kind of see some continued grinds coming in here. You have your 1, 2s in here, your big 3, and then now are we seeing some 4, 5s in here? We could see one more drop to actually hit the value area low. But if we pull a golden pocket from our rejection highs at 16.7 down to your lows. Okay, let's look at our, yeah, your 0.5 Fibonacci's there. It's not as nice as the golden pocket, guys. But I would say this is a level. There is confluence here for a rejection at the point of control of your 2-year long range, in confluence with your 0.5 Fibonacci, and in confluence with the bearish backtest of the pitchfork. Now, this is an area where I'm definitely interested in looking for a potential short position if we have some confirmations as we're coming up to that area. You would also grab some internal liquidity from last week's highs, or at least Tuesday and Wednesday highs. You would grab that internal liquidity. But depending on how we move up here, we could be looking at, once again, that bigger 3-wave corrective move just to make one more low here on the charts. But Chainlink is a little bit more messy than some of the other coins. And I would say, as far as local support levels go, let's turn on, those naked weeklies. Okay. I'm just going to mark these out real quick here, and we'll look at our naked dailies. And I want to mark this out. Okay. And other than that, I'm not concerned about these very local ones here. Let's now also mark out our daily level of support. Actually, that was hit the next day, so we are not going to mark that out. Now, zooming back into the hourly chart, we can look at some local levels. Pulling a golden pocket from the lows on Friday to today's highs, our current highs, anyways. Looking at your golden pockets. Okay, and I would say your 786 is going to be down at that naked daily point of control. So that is what I would be looking at for a local. If we're going to make a higher low and continue a sideways range in here at the value area low, remember, guys, like I said earlier with Ethereum and with Solana was at its macro value area low. You oftentimes don't drop into it, bounce, and go straight back up. You will start to form a range down here, start to form some exhaustion, start to form some confidence for the bigger buyers to start accumulating at value area low. And it's a 2-year long range, so there's precedent here to form a range. So if we come down to this 786 around 11.9, then that is an area where a local long position could be had. And then our resistances above us, once again, we have that 14.3. That's the big resistance above us. And then more locally, just pulling of that last drop that we saw from Thursday to Friday, our golden pocket. Okay, we're rejecting from that golden pocket right now. That's right. We just looked at that. Let's see. Let's pull it from when we rejected or when we finally lost the pitchfork. So we were trying, you can see here, we were trying to form a rounded bottom and bounce at the bottom of the pitchfork, but then we lost it. Bearish backtest, rejected, rejected. So from that kind of high there to our low, you can see that our golden pocket is at that naked weekly point of control. So just above us, we could see a little bit of resistance. Now, this to me is not the nicest resistance. Naked weekly point of controls are very strong levels. And we do have some golden pockets there, or a golden pocket there. That is between really like 13.37 and 13.5, just above us. Just be aware, guys. If we are developing some bear divs on the chart, higher highs in the price action, lower highs in the momentum waves. And let's look at our 2-hour. Yeah, not really 2-hour. Yeah, not really. Nami is forming those 2-hour bear divs in here, and bear divs on money flow locally. So if we continue to grind up in a slow, grindy move to the upside, we could see that rejection. So, kind of this sucker, you could see a rejection and then something like that, making your bigger overall 3-wave corrective move and your bigger range that could form between the point of control and the value area low. Very similar to Solana, with its point of control at 144 and its value area low at 125. So just be aware that is something that we might be looking at over the next weeks to months with some of these altcoins. They're at macro support levels, but they also have some resistances above. We could form a range in here, start to form a bottoming range for a couple months before deciding a direction on whether to break back up or lose the range and continue down. Now on Chainlink, we do have some macro support coming in around $10. You can see, and I covered this in depth on Friday's live stream. So if you go watch Friday's live stream, you'll understand more. But I'm just going to say there's some very key liquidity resting into our macro logarithmic golden pocket. And this golden pocket is literally pulled from your bear market lows to this cycle's highs. That golden pocket was front ran in April when we came down in April in our multi-month crash from December to April. We front ran it just barely. So seeing a liquidity grab of April's lows into your macro golden pocket would be a spot buy for me. You can see I have it marked out kind of a spot buy opportunity because I do you. But that's about it, guys. If you did get anything out of today's live stream, please like the video. Please subscribe to the channel. I will be live tomorrow, 2 p.m. Eastern Standard Time. Come join me. We can look at Bitcoin together live. We can look at some of the altcoins. We can find some live trading setups and maybe even catch some trades live. If you're interested in joining the Telegram community, the link is in the description below. Remember, all you have to do is sign up with BYDFI using my affiliate link and deposit at least $100 into that account. That's your money to trade with. You'll get discounts on trading fees. You can earn some deposit bonuses there. So if you're interested, links in the description. Thank you guys for everything, and I will see you tomorrow.